Welcome to TalkTickers, where we break down the earnings calls that move markets. Today, we're digging into the massive earnings report from gold mining giant Goldfields. Let's get into what's driving their success, from the mine all the way to the mint.
Okay, so Goldfields, ticker GFI, just posted a stellar first half for 2025, and they kicked things off with an earnings beat that didn't just edge out expectations, it crushed them by nearly 90%. That really caught the market's attention. But the number that really turned heads was their cash generation. They pulled in $952 million in free cash flow. Now, to put that in perspective, this is a complete 180-degree reversal from the prior year. We're not talking a small swing here. This is a more than $1 billion turnaround in cash flow, which is just a huge signal of incredible financial health. All right, so let's dive into this a little deeper because the numbers for the first half really do tell a powerful story of outperformance. And this was driven by both fantastic operational execution and, of course, a pretty powerful gold market. The sheer scale of this performance is what's so impressive. Okay, so earnings per share, or EPS, came in at $1.15. Now, the market's consensus estimate, what Wall Street was expecting, just 59 cents. So they absolutely obliterated that, and at the same time, revenue surged 40% year over year. You see, this wasn't just about meeting expectations. This was a fundamental reset of what the market thought was even possible for Goldfields. And as a result, well, the market has responded enthusiastically, to say the least. GFI stock has dramatically outpaced its peers over the last 12 months, and a strong earnings report like this one only adds more fuel to that fire. So, you might be asking, where did this incredible performance actually come from? It wasn't just the high gold price, though that helped. No, this was about strategic execution finally hitting its stride. The results were really driven by two powerful engines. First, you've got the successful ramp-up of the brand-new Salares Norte mine down in Chile, which is quickly becoming a major production hub for them. And second, there was the really strategic move to consolidate 100% of the Gruyere mine in Australia. This simplifies operations, sure, but more importantly, it adds what the industry calls long-life ounces, which just means a reliable source of gold for years to come. And it's in a stable, predictable region.
And here's the key takeaway, the thing you really need to get from this. These catalysts are just getting started. The market is now looking at a packed schedule over the next 6 months, with major milestones that should just keep building investor confidence and proving out the company's growth plan.
Yeah, this performance wasn't accidental at all. It's part of a very clear strategy laid out by management. They've been telegraphing this for a while, and now the execution is really speaking for itself.
The CEO, Mike, was super explicit on the call. The entire strategy is designed to grow cash flow per share. See, this isn't about getting bigger for the sake of it. No, it's about making smart moves that put more money directly into the pockets of investors.
And looking ahead, management laid out a crystal-clear playbook. They've scheduled a capital markets day in November to detail their long-term outlook, and they've been hinting pretty strongly at higher dividends fueled by this new level of cash generation. The message is clear. The rewards are coming.
Their capital allocation framework is really a disciplined balancing act. On one hand, they're rewarding shareholders right now. A 133% dividend hike is huge. On the other, they're investing in future growth. And all the while, they're maintaining a rock-solid balance sheet. Their net debt to EBITDA ratio, which is just a key measure of a company's ability to pay its debt, is down to a very healthy 0.37 times.
Okay, so after digging through the results and listening to the call, here's our take. Here's what we think comes next for Goldfields.
The key question for every investor right now is pretty simple. Can this momentum continue? Or was this just a one-time perfect storm of high prices and project ramp-ups?
We are initiating coverage with an outperform rating. For us, it's clear. The company is firing on all cylinders, they're operating in a strong gold price environment, and all the strategic pieces they've been putting in place are now beginning to pay off in a major, major way.
So we expect this positive trend to continue. The stock price is likely to re-rate higher, which just means investors will be willing to pay more for it as these big catalysts are delivered. Now, the key metric to watch will be their all-in sustaining costs, or AISC. Just think of this as the true total cost to mine one single ounce of gold. If they can keep that number low as production ramps up, well, the cash flow story only gets better.
All right, now for our final segment, where we pitch a trade idea for the experienced investors listening in. This is where we look beyond the obvious.
We're calling this one the Dividend Dominator. The thesis is simple. The market is still underappreciating the coming wave of cash and the bigger dividends management has signaled. The plan involves using call options, which are basically contracts that give you the right to buy a stock at a set price for a certain period. By using options that are 12 to 18 months out, you can capture the potential upside as these projects come online, but with less capital up front than buying the stock outright. It's a way to play for both the company's growth and its increasing dividend, all in a single trade.
And as always, this is not financial advice.